I have a question because last time you and I were on together talking about gold, you said gold had some demand because dentists like to use it in dental work. That was May 22nd, and since then, gold is down 5%. 2 years ago, you said it was going to go to 5,000. Well, it's at about 1,200 right now. My question is, Peter, people watch us because they want to figure out how to invest. They want a little advice. When are you ever wrong? When are you ever wrong, and how do you ever learn if you're never wrong?
Well, first of all, right, I've been consistently telling people to buy gold since it was under $300
consistently
an ounce.
wrong.
So people who have been following my advice for the past 13 years and have bought gold are actually doing better than people who have just bought stocks. Just go look at the tape.
So you're never wrong. Peter, I think that this is
now,
actually
I didn't say that.
dangerous.
You said
this
that.
Is
but
dangerous.
I will tell you this. I am wrong less often than every other guest that comes on this program, bar none.
But by the time it's all over, based on all the bad things the government is doing, I would not be surprised to see the Dow gold price close to 1-to-1.
So you're still long gold, I assume, and you're still recommending gold to your clients?
Yeah. I mean, gold now is around $1,000 an ounce. Again, I wouldn't be surprised to see it at 5,000 over the next several years. It could be a lot higher.
They are going to make the euro almost as weak as the dollar. And, now I might have to say, instead of just going to 5,000, maybe gold's going to 10,000. And I know somebody there said, why isn't it at 2,000? Don't look a gift horse in the mouth. Just buy it.
I want to connect the dots for our viewers out there. If you believe gold is going to go to 10,000 an ounce, and I'm looking for a number or percentage from you, where will the U.S. stock market go?
Well, the stock market might still be at 10,000. What I've been predicting is that the relationship between gold and the Dow will be 1-to-1, just like it was in 1980 and just like it was in 1929. So that can be gold 5,000, Dow 5,000. It can be gold 10,000, Dow 10,000. I don't know, but I think those two numbers are going to get very close to one another.
Peter, all right, so we hit 1,800 on gold today. Is this flood into gold warranted, and will it continue? So these calls for $2,500, I'm guessing you might think that's conservative then, since we sit at about 18 right now.
Well, there is no ceiling to the price of gold because there's no floor to the dollar. What is our economic policy? Print money. I mean, gold is not just a commodity. It's a monetary metal. And the reason people are buying real money is because they are losing faith, and rightly so, in fiat money, in paper money. It doesn't work. And so the people who are smart are moving into gold. The problem is most people haven't done it yet. Hardly anybody owns gold. That's the problem.
But I know it's going to happen. I got a pretty good track record at detecting bubbles. And it's interesting that the people that missed the stock market bubble and missed the real estate bubble think that they see a bubble in gold. That's the one place there isn't a bubble, because gold is reflecting the loss of purchasing power of fiat currencies. Gold is simply telling you how much money, how much value rather, dollars are losing.
Welcome back to Money in Motion, currency trading. The recent dollar gains have been gold's pain, bullion actually falling into official bear market territory this week. Surprisingly, though, our next guest, maybe not surprisingly, actually, our next guest says it is time to buy. He is Peter Schiff of Euro Pacific Capital, author of the little book of Bull Moves. Peter, it is great to have you with us. You've been a gold bull for quite some time. And I'm wondering if you were able to take advantage of this 20% decline to add to your positions.
Yeah, we've been buying. Personally, I've been buying, particularly in the mining stocks, which I think have a lot of value. I was very bullish on gold for 2011, this time 2010, and for most of the year we had a very strong market. I didn't anticipate the extent of the decline towards the end of the year, although that makes me even more bullish for the prospects for gold for 2012. I think the fundamentals have never been better for gold, and I think prices are going a lot higher.
Hey, Peter, it's Andy. Are you still sticking with your gold 5,000? Because I mean, gold's come off, and a lot of people have barfed on their shoes basically with these gold positions. And I know you were extraordinarily bullish, but what's your time frame for this thing turning around?
Well, I still think it's headed higher, so I'm not really sure when you're talking about the turnaround. I don't think that the correction that we've had in the last few months has turned the bull trend. I think we're still in a bull market, so I think that trend is going to continue. The question is the correction over? I don't think there's much more left in the correction.
It is related to the rally in the dollar, and that is gold, the shiny metal posting a 6th consecutive losing week, and that is the longest losing streak since May of 2004. But that run has not dampened the enthusiasm of our next guest. Take a listen to what he said to us back in September.
The currency that's about to collapse is the dollar. And that means the sky is the limit on gold. It's going to go to 5,000. I mean, it's just a question of when.
Peter Schiff of Euro Pacific Capital joins us once again. Peter, it is always great to see you. Happy New Year to you. I think that some people out there might, make the comparison of your comments to a broken clock. What do you say? Because it's
I've been saying gold's going to go up for 12 years. If you want to say I'm a broken clock, take a look at a 12-year chart. I've been right. Now, there have been pullbacks. I mean, it doesn't go up every day, but you describe gold as being in the gutter. I mean, it's hardly in the gutter. And as far as the dollar, it's not the king of anything except maybe depreciation.
Well, your top story, metals in full meltdown mode. Gold down more than 26% this year. By the way, it's on track for its worst quarter on record. Silver, even worse, down a whopping 39% year to date. Peter Schiff, CEO of Euro Pacific Capital, is here. So is Mike Vogelsang, president of Boston Advisors. Peter, I guess my take is not why gold has collapsed off its highs. I guess my take is, should gold have ever been $19 an ounce in the first place? What's your take?
Well, I think so. I think it's headed higher. I think that what's happening right now is you have a lot of speculative pressure on the gold market. You have speculative longs who have been getting out. You have speculative shorts that are getting in. But I think everybody is operating under a false narrative, and so gold is being mispriced. The U.S. economy is not recovering. We are entering back into a recession. We might be in recession by the end of this year.
How can you say
the housing market, housing prices aren't. Let me finish. No, housing prices aren't going to keep rising. They're about to roll over and make new post-bubble lows. The Fed is not about to tighten. They're going to ease. They're going to do even more QE, not less. I think when the market figures this out, there's going to be a sharp reversal in the price of gold. And I think the people who are selling it now are going to have a big problem trying to buy it back.
Tell me what your target price for gold, tell me if this is the wrong time limit, but maybe by year end, what do you see for the price of gold? And what would get it there?
Yeah, it's hard to tell. I think the bottom is going to drop out of the dollar. I think we have a real economic crisis coming in America that's going to be much worse than the 2008 financial crisis. And I think gold is going to be going up very rapidly when it turns around. Okay. You can see several days where gold goes up by more than $100 a day. I think people are going to be very surprised by how quickly gold rallies. Ultimately, I think it goes to several $1,000s an ounce, 5,000 or higher. Okay. I doubt it will do it before the end of this year, although anything is possible if we get a currency crisis.
Fund managers suddenly getting cold feet on gold. They cut their net long positions 27% last week. A huge revision to the bearish side. Here to talk about gold and what's in the vault is the CEO of Euro Pacific Capital, Peter Schiff. So, Peter, you're having some questions, not so much bull market, bear market, rally or not, on really what's behind all this paper currency that's trading gold.
Well, you have a lot of speculators who crowded into the gold trade after gold had made a spectacular rise. And, I obviously had too much company back then. I welcome the fact that a lot of the fair weather gold bulls have abandoned their positions.
But you surely aren't, as an investment advisor, aren't criticizing someone from liquidating a position that's fully into a bear market that's fallen 35% over 2 years.
We don't know if this is an ongoing bull market or really the change into a secular bear. I don't see any of the fundamentals being in place that would support that. I think everything supports the fact that this is yet another buying opportunity in a string of buying opportunities. And in fact, I think this might be the best buying opportunity yet.
At what price in gold are you able to say, you know what, it is a safe haven again? Folks got to get back in the water because a lot of investors got burned in the last year and a half from 1900 down to 1181. But what's that exact level in gold where folks do come back? Is it 1325, 1425?
So whether it's 1300, 1350, where the magic number is, I don't know. But at some point, gold's going to go straight up. It's going to be like a moonshot. And maybe it's going to have to take Janet Yellen to come out and call off the taper. If they continue with the taper and try to exit QE, they will bring about a worse financial crisis than 2008. All the big banks we bailed out will fail again. We'll be in a much worse recession. To avoid that, they have to do more QE.
All right, Peter, taking all those things into account, all the factors that you just mentioned, in terms of the gold price for 2014, what's your long-term target for the year?
Well, I don't know where it's going to be at the end of the year. My guess is that it's going to be higher. I think it could be much higher. I think that the outperformance of gold in January can accelerate through the end of the year. I don't think that January is necessarily a head fake. I think it could be a good harbinger of things to come for the balance of 2014.
I can't let you go without asking. You just mentioned gold. I got a lot of tweets this morning when I said I was having you on. Is that the gold bug? All right, gold's at $13.22 an ounce. It's up $6 on the session today. Where's it going?
It's going a lot higher. You know, the only reason it fell in 2013 was because a lot of the latecomers to the rally at that time jumped to the wrong conclusion at the wrong time. People are optimistic about the U.S. economy. They think we have a real recovery. They think the Fed is going to take away QE and raise interest rates. They're wrong on all fronts. We are relapsing back into recession if we're not already there. And the Fed is going to jack up the amount of quantitative easing.
Right.
Unfortunately, it's not going to eliminate it. And so gold is going to go ballistic.
All right,
I don't know when this big rally is
You're
going to
long the
start,
stock
but I'm
market,
pretty sure that we've bottomed out. And so we've already turned the corner. The question is, when are we really going to accelerate?
Peter's been wrong for so long, he's due to be right.
All right.
No, I haven't.
Peter, I gave you the last word, buddy.
You know, you were on the show just over 2 years ago today. Hard to believe that it's been that long ago. And this is what you had to say about gold. Then I want to get your reaction.
One day we're going to look back at 1700 with nostalgia. People are going to be shocked at how inexpensive gold was when it could be snapped up for such a bargain price. And it's not going to take too long, just in a few years. I mean, we're talking gold 5,000. That's not the ceiling. That might end up being the low end of the range that we're going to be into.
Okay, Peter, we're lower now than we were then. 5,000 hasn't panned out. It's a couple of years later. If people bought gold on your recommendation, what would you tell them today?
We would keep buying. I mean, 1,700 I still think is going to look cheap compared to where the market is going to go. Obviously, it's going to take a little bit longer than I might have believed at that time because so many people are still fooled, right? They still believe that what the Fed did worked. When they realize what a disaster it was, that the Fed is in a monetary roach motel, that an economy that lives by QE will die by QE, when it's QE infinity, when its rates are at zero forever, the price of gold is going to rise very rapidly. And I think the people who didn't buy it at 1,700, who might think they're smart now because it's at 1,250 and they don't own it, I think it'll go through 2,000 very quickly, and people will be very upset that they didn't buy gold at 1,700.
I just put some time frames on this because not everyone may have the same patience level that you have. And I've heard the 2,000, 5,000 call for years now. So when do you think we'll actually break that point?
Well, first of all, I mean, look, why don't you ask these questions of people who are in the stock market? The NASDAQ is a lot lower than it was 12 years ago. Every time someone comes on CNBC and says, I think you should buy stocks, do you say, well, stocks have gone nowhere for 12 years. Why, most people aren't that patient. Take a look at how well gold has done relative to the stock market. The stock market has gone nowhere during a time period where gold has gone up several fold.
But I got a pretty good track record at detecting bubbles. And it's interesting that the people that missed the stock market bubble and missed the real estate bubble think that they see a bubble in gold. That's the one place there isn't a bubble.